yeah, 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 yeah. Welcome back to the Finance Corner. So today, Wednesday, October 16th, got another week or another day of some live trading and some losing some money. Yeah, let's talk about it. So I think yesterday when we were together, we had a trade idea on US 30, and let's go over that real quick because I got clapped. So we were basing it off of this imbalance here. I thought that we basically were going, and it's crazy how I got the direction right, but somehow the trade wrong. So like I was basically bearish, but when we came down here and we started rejecting this imbalanced candle here, you can see that this is kind of the area I expected to sell off. So I kind of entered here, but then when the market pushed a little higher, it took me out on this move. See, it went higher like 80, 88 pips, and that move took me out, and then we sold off for my actual target. So we love when that happens. I love it. But anyways, today's a new day. Today's a new day. Let's go over some news. Anything we can expect for this week or today. I don't think there's actually any news relevant this morning. As you can see, at least on Forex Factory, you don't see anything. Let's check Bloomberg. It's a lovely morning. Lovely morning. I love when the morning is lovely. So Tuesday, yesterday. Um, wow, there's a lot of news yesterday. Okay, so Wednesday today, yeah, we got GBP. We got the CPI for the British pound. And all that number, all of those numbers. The month-over-month change. Hold on. It's like forecast and actual. No, previous forecast actual. Look at the data real quick. So previous forecast actual. So the British pound actually went nowhere for this past month of September. Year over year, they're actually doing worse than expected. The British pound, the GDP for the CPI. Oh no, this is CPI. I confused myself. I thought this is the gross domestic product for the British pound. Okay, so this is CPI. So that's actually a good thing then. CPI coming down, that's actually a good thing. They got inflation under 2%. That's pretty cool. And then as far as any news for the rest of the day, today's right now it's 9:30. Yeah, that's about it. Federal budget balance sweep or federal budget balance. What is this? Measures the difference in value between the federal government's income and expenditure during the reported month. Positive number means the budget is in surplus. Negative number means deficit. The difference in value between the government's income and how much they spend. So their balance sheet. Interesting. That happens at 2 o'clock. Interesting. But that's about it. And then it's just gonna be straight, mostly price action today. So I am running a trade though. Oh wow, look at gold. Wow, literally wow. Um, I am running a trade though. I can go over that real quick. So we're on GJ. So basically, let's talk about my personal journey first. Hold on, let me get some coffee. So yeah, I kind of messed up in the sense that I went on tilt yesterday and lost that phase one account. That it was already in drawdown, but like I didn't have to full port and do dumb shit. So essentially, yeah, I'm on a new challenge today. Um, but yeah, basically the trade that I ran was based off of this structure here. So let me go over it real quick on a 1 hour chart. So first things first, we were trading like around up here. I actually go over it real quick. So we were trading up here, and I identified these equal lows, but I also had a limit that was at the 193 area, 193.80 area, but it wasn't on this account because remember this is a new account, and I remembered that I had that limit. So basically, I wondered if like price can get back down into that area. So I was actually observing price do that, and then it made this huge ass down candle, right? And that's essentially where it hit when it hit right at 193.80. So I didn't have the limit activated, but I did use it as kind of like the area that I wanted to enter. So that's essentially what I did here. This is US 30. So if we come here, we can see I got my entry pretty close to the bottom here because that was basically what the entry is based off of. And that limit was actually set, I think, way back here. Um, oh, I think the limit was actually set around here before London on Friday because I expected kind of like a little sweep of London to get into that area and then push higher. But one thing I want to point out though is the reason why I use that 80 level is because we've been using 80 levels for like a catalyst on GJ for the longest time. So if we can observe right here, 191.80, we see exactly where that wick is. All right, cool. Let's look at another one. Right here we have close enough. No, right here we have 189.80. See that? Launched for about 200 pips, 300 pips right there. Let's go back even further and see this significance of the 80 psychological level. So again, right here, let's point these out. So we got 188.80 right here being the low catalyst. We have it again here. We make this a different color so you can clearly see that the yens have something going on. The yens are getting freaky with this 80 level, you know, and it's not quite at the specific 80 level, but it is at 85 right here. 85, and then right here again. Right here again, 80 to the T. To the T. So as you can see, the yens have been liking these 80 levels. 188.80, 186.80, 185.80, 183.80. I think we can keep going as well. So if we consider this very last catalyst, it bounced off the 80 level. So that's essentially what I was looking for when I set that limit here. Or where was it? I set the limit here. That was basically what I was looking for because I did all this back testing and I seen, well, when we go to make new highs, we bounce off that specific 80 level. So that is something I was basically looking for to see if we can use again. And lo and behold, what do we have here? An 80 level. So I'm I'm gonna break even on this trade and then I'm just gonna hold it. So let me go ahead and do that now. Still got a far ways to go to pass phase one, but it's okay. It is a-okay. Let's move these stop losses up. Yep. And yeah, hopefully we get some volatility. I mean, it's been a kind of like a slow grind to the top here. But like, why? I need to recover. I need us to recover all of this and start hitting these liquidity points. That's really where I'm looking to take profit. So I'm a little ambitious on the second one. This is the first target, and then second target is kind of like, because I know that we're bullish on the yens anyway. Like I know we're bullish on pairs ending with the yen. So I have no, I don't mind holding, or I don't mind having an ambitious target, but it's just a matter of like if and when we get there. All right, let's take a look at the indexes though. See if anything presented itself. So yeah, it's interesting. I remember we were bearish on the Dow Jones yesterday, but it might be having some bullishness today. Okay, the VIX is actually coming back above 20. So that is something interesting. It looks like the VIX is gearing up to push higher and really take profit from these all-time highs from the indexes. Yeah, you see these other indexes. Then we could take a look at some the latest news. Always important to stay up to date with economic events and shit like that. The market doesn't move based off like nothing. All right. Ooh, quick short-term top-down. Like we're at all-time highs, and yesterday we got the first red print. So it's like okay, and then Nasdaq looks like it's already taking back. We already look like we're about to close below this daily EMA here. Interesting. Very interesting. Yep, all-time highs, all-time highs. The Dow Jones is the strongest for now. And let's see. If you hit this daily imbalance here, hit this daily imbalance here. So potentially, see, so scenarios I'm looking at is like the Dow ending higher, but it depends on how high this gets because if this is going to come above yesterday's high, I think that's a bullish signal. I mean, that is very far away though. That's about like 400 points to the upside. But not only that, it has to stay there. So I don't think that that's very likely. It might just be testing. It might just be testing a high point to come back and sell off. Let's see. A point at which we can look at is actually here. So we got the world's smallest imbalance. And we also have a 1 hour institutional candle to the sell side. The line white. All right, how about on this 1 hour chart? Okay, we're already getting discrepancies. we're already getting massive discrepancies. So NASDAQ sold off at open for a healthy amount of points. So did S&P, and Dow Jones is the only weirdo. Dow Jones is the only weirdo. I wonder if we're gonna use this area as like a reversal pattern because it is technically bearish structure at this point. So things that we could look for is like a sell above market open in bearish conditions. I think bearish conditions were pretty much set yesterday. As you can tell, you know, we had this catalyst here. Equal is actually kind of equal lows here. Nope, we tapped into that right here. We tapped the equal low on this wick down. Printed a little bit higher, printed lower, and printed way lower. All right. How is this gonna, what are the implications for this on my GJ trade though? That's the question. That is the question. I mean, I'm broken even on it. So I think that we already did take a lot of risk off the table, but I'd hate to just give back 2% to the market. All right. I hate the feeling of having to like wanting to do too much because I'm bearish on this, but it's not the best place to actually enter. All right, let's let price action develop a little bit. We'll watch this 15-minute chart. Let price action develop a little bit. What's new on Wall Street Journal? The guru says you can get your what? Years-long boot camp preparing kids to apply to Ivy League. Parents and Wall Streets are on board. I'm honestly intrigued. This guy takes kids through a boot camp to get them ready for college. Damn, it's a long article. Flew into New York College counselor, leave college. Two traveled from Switzerland, two from Australia, from the United Kingdom. Youngest was 11 there to meet Jamie Beaton, 29-year-old Rhodes Scholar from New Zealand with a reputation as the man who's cracked the code on elite college admissions. How does he do it? Optimize childhood by starting to build skills, interests years before high school. Makes sense. Choose areas where you can excel. If you aren't going to be a top performer in an activity, drop it and move to something else. That's actually solid advice. Either through entrepreneurship, scholarship, or well-placed PR. Chief executive and co-founder of Crimson Education. Kids took note of every word. He's like the Steve Jobs of counseling. What? Private equity launched in 2013 is now valued at 554 million after several funding rounds. Pitch book. Investors include venture capital giant Tiger Management and related firm. 2% of students admitted to the undergraduate class of 2028. Oh, this year Beaton's clients made up nearly 2% of students admitted to the undergraduate class of 2028. So that means they just got admitted today, or not today, but this year. Several elite schools including Brown, Columbia, Harvard, and UPenn. Yale, Stanford, Cornell, certified price. How much does it cost though? And the list of students admitted. Clients pay Beaton's firm from $30,000 and from 30,000 and 200,000 for a 4 to 6 year program that includes tutoring in academics and test taking, and advice on how to gather stellar teacher recommendations and how to execute extracurricular projects. This can range from writing a book to publishing an academic research paper or starting a podcast. I mean, actually, this actually sounds very useful. But I mean, I actually, it makes sense though, because a lot of people do end up going to college and they actually don't know what they want to do. So it sounds like this guy really just made a program to make kids, like, have kids figure out what they want to do before they get to college while also building up their resume to get there. I mean, honestly, shit, really good. Uh, Revenue in college consulting is tripled to 2.9 billion. 10,000 people work as full-time college consultants with another 3,000. Wow. Few barriers to entry. Most are mom and pop shops, and fraud has tainted the industry. Resumes packed with exclusive degrees. He attended Harvard and won a Rhodes Scholarship. Earned a master's in education. It's all supply and demand, he said. You're talking about massive interest and demand and not that many more seats. Number of students applying to top universities has increased about fivefold. Oh, to top universities. That's interesting because I know overall college attendance has been coming down and college admissions. Like I remember in my last year of college, I was in the study room and I was overhearing like a staff meeting and they were just like, "Yeah, man, we got to get more people applying to Old Westbury. Like we have to get more people." They were like, "What can we do to get more applicants?" So, makes sense. People are overall going to this college less, but it looks like they want to go to Ivy Leagues more because it was a what 20% increase. The number of students has increased about fivefold over the past 3 decades. That's in top universities. Increase in class sizes are negligible. Admission rates are now below 5% at schools, and Yale down from 20%. Wait, admission rates are even lower? Well, that's interesting. I mean, I'm glad I'm done with college because it's only going to get more expensive. This is a very interesting article. I think we got pretty much the gist of it, though. All right, what's next? In a couple minutes, we'll take a look back at the market for the 10 o'clock move, see what happens. Um, Morgan Stanley. Oh, yeah. The banking sector has been doing very good this year. Goldman Sachs and JPM. Dow edges up. Morgan Stanley gains on strong earnings. They had earnings today. Stocks fall after Louis Vuitton owner. Da, 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 da. So we have the Dow Jones so far this week. Nasdaq. Yep. Major U.S. stock indexes were split between small gains and losses. This is really what's been making it so damn difficult to trade. It's like you see the Nasdaq doing one thing, the S&P doing the complete opposite. It's like, which one do I trade? Okay, interesting, interesting. See, this is what I'm talking about. Like, this looks like it wants to reject off this area and come back trading down. This looks like, I mean, I don't know. This looks pretty horrible. Like, it could just continue, but it looks like it could want to reverse as well. So, I'm not really eager to do anything yet, press any buttons yet. I guess let me see. The only thing, if we're gonna be bearish, I don't think I mind taking a short, like a short term short. I don't mind it because usually I would not like being in like a bullish trade on the yens and then a bearish trade on the indexes because they are not 100% correlated, but from my experience, they do tend to move in the same direction. But I don't know. This might be one of those days where they could just be doing their own thing. They're not exactly the same asset, but there is a lot of correlation between what the yen does and like our market because the Japan is the largest holder of U.S. bonds. So a lot of what their dollar does, or a lot of what their currency does, is based on our economy, and they kind of try to curate their monetary policy in a way that like favors them getting the most out of their bonds that they hold, and that's why we always see the JPY intervention, Japanese yen intervention from the Bank of Japan. Um, like they always intervene. Um, that's what happened here. No, sorry, that's what happened here, and yeah, I think here as well. There's two Bank of Japan interventions, but sometimes if you're on the right side of that move, we can really get some nice movement here. But if we take a look at the daily chart here on the yen, it really doesn't make any sense for me to be bearish on this specifically. The only thing is figuring out where the low for this week could be. And to be honest, it could be in already. It could potentially be in the low of the week. But for that reason, I'm going to hold it. Just gonna hold it. And this is the low of the week actually. That's actually pretty cool. Now I think about it. This is the low of the week. Because last week's price action started here. This week's price action started here, and this is the lowest point. So yeah, hopefully we can just start trading higher. But as far as the indexes go, or at least the Dow Jones, um, yeah, this is the reason why I pointed out this area. I want to see it reject. But honestly, I don't want to just sell this because from my experience, you can be right and get a great entry by just shorting right here, having a kind of a tight stop loss. You can you can be right, and if you're right, there's a lot of downside to be had. But I'd rather the market show me that it's willing to do that first. So we're gonna wait on this 5 minute chart for a reversal pattern. But I'm gonna leave this here just to see how it would have played out if we did enter it right here. Let's say the target is like this low from 930. And that's another thing that I need to work on is that like I usually make my targets pretty like a decent size. So I need to just be patient and like let these things play out. There's often days that I really fall victim to the FOMO, and that shit really holds me back. Yeah, Morgan Stanley, they had earnings. Morgan Stanley is the luxury retail. I don't know why I thought of J.P. Morgan. This looks like all time highs. This looks like some all-time highs. Yeah, yeah, it's actually really good. Good for people. Good for them. The October run of 2020. Morgan Stanley doing good. I want to take a look at oil. I kind of just let go of oil. I had an idea, and I don't know if it's still playing out. The idea was basically, we have these equal lows. Let me show it on the daily chart because all these markings are on the daily chart. We had these equal lows. We destroyed that. We made another low, and now we started printing higher, cleaning up imbalance, printing higher. Maybe we can come back to clean up this imbalance again. But I don't know. Literally don't know. The way that it's looking does not look like it wants to bounce off this daily chart or bounce off the daily imbalance. Maybe it would bounce off this. Maybe using this institutional candle as a catalyst instead. So I'll set that alert right there, and we'll see if that gets filled. Gold's just showing out. Gold is just showing out. And now we got some equal highs. So literally more of a reason to be bullish. But we might be taking a short breather before we continue that. Who knows? Who knows? We're staying above the moving average on this hourly chart. So maybe. So it looks like this got the breakout. We would have gotten clapped, or we're very close to being clapped. So I'm very glad that we didn't. What is that recovery? What the fuck? Look at this recovery. That's interesting. Hold on. What does this mean on the daily chart? Nothing. Nothing. We're still very high. Okay. But if anything, it just means don't sell, which is what I was looking to do. Very interesting. Very interesting. See, we would have got clapped right there. All right, I'm gonna be right black. Give me be right black. All right, I am Black. Shout out to OBS for actually not not lagging. I think I have the right stream settings, so that's amazing. All right, what's going on here? What's going on here? Nice, nice, nice. Bullishness. So this is what I'm talking about. So you see how the Dow Jones, really all the U.S. indexes are trading higher now, and so is the yens. Not by much, but it's starting to move higher. Starting to move higher. What else we got? Oh yeah, this is Morgan Stanley and their earnings. Gender gap is defining future deadlock Trump-Harris race. Interesting. Yeah, I mean, with the election coming up, not too far. Yeah, man. Oh, this is interesting. I've never seen this before. Possibility of a recession in the next 12 months. Wait, when was this? That's actually very interesting. Throughout 22 and the first half of 23, there's like a 65% chance of a recession. But now that we're going to the rate cut cycle, that's going to be coming down. Wall Street Journal survey of economists. Oh, this is interesting. People think inflation is likely to be higher under Trump. Hold on, let me read this. Forecasters are increasingly upbeat about the economy's prospects, according to Wall Street Journal's latest quarterly survey of business. Following graphics show what economists are thinking and how their predictions of the economy have changed over the recent months and years. After looking at the charts, see whether you can guess what the economists said about the two main presidential candidates and manufacturing employment. We asked survey respondents to a number of questions. Here's their answers to stack. Here's here's how their answers stack up. I can't read. Both now and 3 months ago, followed by three questions for readers to answer. Under which presidential candidates' proposed policies is inflation likely to be higher? They think Trump. That's interesting though, because that's interesting. Under which president interest rates likely to be higher under Trump? That both of these can't be true. Which presidential candidate's proposed policies would put more upward pressure on the deficit? That's definitely Harris. No, that's definitely Harris. She's the one that wants to spend more on like what's it called, recovering student loans. Which I mean, I'm not mad at that, but she wants to and add more tax spending. I don't think Harris is. I think Harris would put more pressure on the federal deficit. She looks like she would want to spend more money. I think that Trump, as a businessman, he should understand that we are propped up to the limit with credit, like America's credit limit. So why would you want to spend more money when I don't know? And it looks like as it gets closer to the election, the percentage is increased for Trump putting more pressure on the federal deficit, having interest rates likely to be higher, and inflation likely to be higher. So I want to talk about these 2 points here. Inflation inflation happens when they print money and they have quantitative easing and all those dollars get flooded into the market, right? Now, interest rates are the monetary policy set by the Fed, right? So, but right now we're on the Fed rate cut cycle. So interest rates are they're already coming down. Interest rates are literally already coming down. They have a whole summary of economic projections, and they want to have interest rates down to, I think, about like, what is it, like 300 something basis points. We could take a look at it actually. I think I have it right here. They're gonna try to bring the federal funds rate down to, see, by 2026 they want to have it around like 3%. So they're literally already cutting rates. Um what about Trump getting into office would make them want to increase rates? That doesn't make any sense. Which policy is going to like have him increase rates? And also in the whole thing about inflation. I mean, inflation is already going to be here when they do quantitative easing. That's outside of the president's direct control. I just find it interesting that people think that, though. I think a lot of people really just don't like Trump, just for him being who he is. But these two things can't be true at the same time. If inflation is going to be higher, then interest rates would have to be higher. But interest rates are not going to be higher because Trump understands that when interest rates, Trump is a businessman. When interest rates are lower, businesses get to refinance their debt at a lower cost, thus saving them money so they can use it more in operations. So Trump likes a low interest rate environment. The market as a whole likes a low interest rate environment. I just don't see how that's true. How would you grade the performance of Jerome Powell as Fed chair? That's a good question, actually. I mean, I don't know. I'm gonna give him a, I'm gonna give him a C. They gave him an A. Proposed policies. Wait, under which presidential candidates proposed policies economic growth likely be higher? Yo, people are so deranged. She literally wants to tax unrealized gains. Like, how does that work? That's not gonna stimulate the economy. Former President Donald Trump has proposed imposing broad-based tariffs on imported goods. How would such a policy affect domestic manufacturing employment within 3 to 5 years? Relative scenario with no such policy. Broad-based tariffs on imported goods. Broad-based tariffs on imported goods affect domestic, so our manufacturing employment. Um, if okay, I see the stuff that the goods that we're getting are gonna be taxed more. Affect domestic manufacturing. I actually don't know how that would affect it. Let me think. Like, there's higher taxes on goods being imported, and then we're talking about the domestic manufacturing employment. So basically, the people inside America that are responsible for manufacturing and shipping. How would it affect their employment on higher taxes for goods coming in? I mean, I think that they'd probably be paid less. Cause like, who's gonna be paying those taxes though? Is it the people who's sending us stuff? That might make sense. I really don't know how this would affect domestic employment. I'm gonna vote remain level. Employment or decrease. I don't. Yeah, I really don't know. Slightly cooling labor market. With inflation easing, labor market has increasingly become focused for anyone trying to read the economy. Here, the expectations of economists were roughly in line with what they said in general survey. Hold on. Let's take a quick look at the market and see what's going on. Wrong tab. So we are moving up here on the yens. Love to see it. And we are having some sustained momentum to the upside on here. Wow, what a recovery. I wouldn't have guessed. I would not have guessed. So we can clearly see S&P is way stronger. S&P is clearly way stronger. Damn, crypto is having a great week. Crypto's having a great week. Just look at that. Yep. Yeah, not too far from these equal highs here and all-time highs. Love to see it. How's ETH? I have ETH. I don't have Bitcoin. See, I need ETH to come up. I need ETH to like get to like 10,000 per coin. I'd be okay with that. XRP, very far from its all-time highs. I think if anything was to be, I think I want to get back into XRP, to be honest. I remember buying it like it's like 16 cents. I think it was 19 cents per coin. And then I actually ended up I bought like I caught this run, or at least most of it, but I literally didn't sell. That was when I was a new investor. I didn't really know what was going on. I was like, oh, this is normal. Yeah, I thought that 600% gain in like 4 weeks. Hey, that's normal. It's gonna go up higher. Funny shit. But yeah. As far as gold is holding strong. Gold is holding strong. Silver is stronger though. And then we're moving. Oh, we got hit. Oh, interesting. Interesting. Let me go back to this 15-minute. With the kind of conviction that S&P came up with, I wouldn't be surprised if they get some type of pullback. So this would be like mitigation, like a textbook mitigation. Um, yeah, this would be a textbook mitigation. We have a low, we have a high, the lower low. Gotta come a little bit higher and then pull back to open price. Or maybe we can just get straight back to open price. But it did come back with some conviction. It did come back with some conviction. So, how's the VIX trading? Oh, the VIX looks like it's moving. A little tiny gap here from left from the 2 weeks ago. Maybe we can come back down and grab that. All right. Not much happening in the market. I wonder. This is interesting. I'm curious about this. Is this? See, I hate when they do this. It's like two different things going on. It looks like they could be selling off, or it looks like they could be ready for a reversal. Because we came back to yesterday's open price, and we're just rejecting it. We're just like, nah, we're good off that. We're good off that. But the S&P is not really having the same story. S&P, I mean, it has so much more to get back to for yesterday's open price, but it's not exactly the same story here. But maybe this could just be a pullback. I wouldn't be surprised if this is a pullback to here. As a matter of fact, if any position today, I think this might be worth taking, depending on how we look when we get back into here. So I'll set an alert for that. And if it does decide to pull back, maybe we can see whatever price action we can get. Maybe we could push a little bit higher because it does satisfy the 50% rule. It is 50% of this run. So if we were that bullish, they'd want to continue buying at a discount, which is around this area. So let's see how that plays out. Uh, Back to Wall Street Journal. So we were talking about, which article is this? Oh yeah, how good was the Fed chair and where the economy is headed. All right, cooling labor market. Okay, they believe the unemployment will clock in at about 4.2% at the end of this year. The rate was 4.1% in September, according to the latest jobs report. They also expect the U.S. to add about 130,000 jobs a month on average over the next 12 months, basically unchanged from their forecast of 139,900. These forecasts show that economists do expect further cooling in the labor market, which has been slowing down this year, but they don't see unemployment rising dramatically. So, a cool labor market refers to people that's not at work, right? Hold on. Economists expect a further cooling labor market, meaning less people will be working, which has been slowing down this year, but they don't see unemployment rising dramatically. So it's gonna be only a handful of families are gonna get destroyed. Not every family is gonna get absolutely destroyed. Only a handful. They don't see unemployment rising dramatically. I mean, one thing that's cool though is I'm I guess technically part of the people who are employed because I got a new job. I'm gonna be starting it in a few weeks. So my data is not on that stat. What is this? Unemployment rate with economists forecast. Oh, um. So the average is they think it's about to stay at around where we are. Hmm. This person is a very pessimistic person. A lot of people agree that we're gonna have a slight uptick though. And what is this? Oh no, this is for the years going out. Oh, I didn't even see that. So yeah, we're at the end of 2024. People expect an increase generally. I mean, actually, no, it's a wide range. It's a wide range. But overall, no, it is accepted that it's going to be a general increase in unemployment. So times are going to get worse before they get better. Times are going to get worse before they get better. That sucks. Share your outlook for GDP. U.S. economy has consistently defied predictions of a recession over the past couple of years, definitely, even as the Federal Reserve aggressively raised interest rates. Last month, central bank cut rates by half a point in a bid to keep the labor market and economy on even keel. What? On an even keel. The Journal's survey opened about 2 weeks later. Forecasts of economists show they expect lower rates to have their intended effect. They now predict faster growth for the rest of this year compared with July forecasts. So that means we're going to get a nice Santa Claus rally. It's funny that they call it that, but like, yeah, towards the December, really, yeah, really the last month before the year ends, like the market has like a nice run. GDP forecasts. This is wacky. This is wacky. We're at 3% GDP. So they expect an uptick. Oh no, this is where we are. Wait, so what are these forecasts? This is previous forecasts. Interesting. Interesting. Okay, so from where we are now, second quarter just finished. We're on the fourth quarter. Yeah, third quarter GDP is going to be October 30th. Everybody's expecting it to be lower. And then when we enter the fourth quarter, Suspected a slight uptick. Bringing down inflation has been the Fed's main focus over the past couple of years, and inflation has indeed eased greatly in 2024. Some analysts believe that inflation could still get stuck at too high a level. Even so, economists remain confident that inflation will continue to cool in the quarters ahead. This chart shows their forecast for the core reading of the personal consumption PCE price index. The PCE is the Fed's preferred inflation reading. Core index shown here strips out the volatile food and energy prices. Right, personal consumption expenditure. So this is how much money people are spending. Just how much money people are spending. They expect it to be going down. Interesting. Let me see. I think periods of high spending is coupled with an increase in the market. Because from 2021 to 2022, I think that's actually when we got the greatest run of the stock market thus far in the past 10 years. Let's check that 21 to 22. So where are we at? From 2021 to 2022. Yeah. 21, we started up here. 22, we ended up here. So the market had a 22% increase from 2021 to 2022. So that's some data right there. You can see that basically the higher, um, the more people spend in the economy, the more the market gets stimulated, and the market likes that. So let's actually observe how this is coming down now. Then, so from 22 to 23, it looks like we kind of still we're elevated, and that makes sense because I think the market also went up 22 to 23 as well, right? 22. Actually, no, 22 was the pullback year. 22 to yeah, we actually didn't really do anything this year or last year. So you see from January 22 to December 23, but we did have that Santa rally. So we did end slightly higher for around like 4 to 5%. Where am I? Which makes sense that the PCE didn't really go anywhere. But when we see from 23, first half of 23 on to now, how has the market been doing? First half of 23, first half of 23 is here. But we really started to pick up towards the end of 23, from 23 to 24. So that's actually interesting. So it looks like the 2021 levels, the market was it was really the reason why the market went up was really based on like fundamentals, like the businesses making more money, people spending more money in the market. So that's natural. But when it comes to 23 to 24, just based off this PCE data, can't really justify why the market was up, I think like 30% this year, from like 23 to 24. So on average, PCE has been coming down kind of drastically from 23 to 24. So like we did have a run in the first half, and then we pulled back for 23, about 4%, and then end of the year at plus 11%, and then ever since then we've been higher. So that's from the first half of 23, and then based on this, you can see that PCE is literally coming down. People aren't spending money like they were in 21, but the market's still going up. So it's like, how can we interpret that? Well, let's see, in 23, they were still increasing rates, I think. They didn't do the first rate cut until this year. So I really wonder why the market. I think the market is at elevated levels then, but I could be just be blowing smoke in the wind. I can't justify a market crash just based off that, but it does look like the market is slightly elevated. It does look like it's slightly elevated, but it wouldn't be. How do you know? Nothing to do about that for now. We can't take advantage of that. Um, like if this whole thing is a bubble, we can't really take advantage of it until we see that it's ready to burst. Until we see some huge sell-offs, which maybe yesterday was the start. Like maybe because we have a big red candle for all three, but we just gotta wait. We just gotta wait. And it looks like Nasdaq's the only one that's okay. It actually recovered back to open price, and it actually failed to get back above open price. All right, all right, all right, all right. Anything new? Nope. Gold, yeah, ready to pull back. Looks like that's a classic reversal. High, market makes a high, low, higher high, lower low, pull back. That's the textbook mitigation. As far as how low we can go, I don't know. But I think we should be able to get to at least here. We should be able to at least snap this to the downside. But fundamentally, gold is bullish, so be careful with that. And then wow, yeah, we actually didn't get any pullbacks. Very interesting. Very interesting. It can hmm. So no day trades for me today. It looks like then, yeah, especially if the market's just gonna keep going. I don't mind it though, but I want the yens, or specifically GJ, to um, I need GJ to go higher. Just go higher. Like pay me, pay me, please, pay me. But we can be holding on to this. Be holding on to this to see where interest rates. Fed September rate cut brought the benchmark. Mm-hmm. Wait, sharply lower forecasts for short-term interest rates. The Fed's September rate cut brought the benchmark federal funds rate to a range between, yeah, see this rate at 4.4% at the end of this year. Okay, implying two further quarter point moves. In the July survey, economists have predicted. Oh, so earlier this year they predicted that the rate would be 4.9 at the close, but we're already kind of below that. So okay, Fed is kind of ahead of expectations on the rate cuts. Economists also expect rates to sink faster in the years ahead compared with what they were expecting in July. Makes sense. Makes sense. Who is this guy? Who is this guy? He's like, nope, nope. Actually, they're not cutting it. We're gonna fucking crash. They're gonna increase, or they no, 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 no. If they increase rates, that means the future is bright. Like the future is very bright if they're gonna increase it back to higher than 5%. Like that's crazy. All right, publishing consensus forecast. Da, 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 business founders concept. These surveys answered 66 economists. Not every da, 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 answers this question. All right, send this text here. All right. Inflation in the economy. I think this article's done here. All right. I think that's pretty much we're up to date on the latest news here. Paths to victory. I don't know. With this election coming up, man, it's gonna be interesting. The next like 2 months gonna be very interesting. Just I wonder what kind of like crazy articles and attacks that people are gonna come up with on both sides, and just I wonder who's gonna win. Wonder who's gonna win. All right. Nvidia, Nvidia. It's all people ever want to fucking talk about when it comes to tech. All right. Anything new on these charts? I think I'm going to head out in a little. Let's see, did we start pulling back yet? Nope. Still, that's funny. Yeah. All right. Let's talk about the dollar real quick. The dollar has been on a tear. It's actually quite interesting. Let me think. They cut rates, I think, on the 18th meeting, right? And I think that kind of set the tone. But a cut in interest rates would not make the dollar go higher, I don't think. Fundamentally speaking, if they cut interest rates, that means dollars are less expensive. Because the higher interest rates means more yield. So that means the dollars going around are more valuable. So they're cutting rates and the dollar's going higher. Not sure how to interpret that from a fundamental perspective. Yeah, not sure how to interpret that from a fundamental perspective. Yeah, because like there could be other things going on then in the economy because it's like the market and valuations don't only move based off one thing, but just fundamentally speaking, interest rates are a very big determinant when it comes to forex markets and the price of these currencies. So I'm curious to see or to know why interest rates are being cut, but the dollar is bullish. It would make sense. It would have made a lot more sense if we just stayed in the range. But it is what it is. It is what it is. They were saying that the euro is going to be extremely weak, and it has been weak, way weaker than the British pound. So in terms of price action here, let me see. Maybe we could even come back to. No, that's pretty low. I don't think the euro is going to get below $1 anymore. But we are on a downtrend. We are on a downtrend on this euro. And it's very clearly stated here on the Euro GBP pair. I remember doing my analysis on this. Like this has been, I observed with this being bearish back in like in the summertime. Like look at this false rally. That's crazy. Look at this false rally. They just came right back to just take this high and then continue lower. So no signs of the euro turning around yet. And it looks like the indexes are pulling back. Indexes are pulling back now. I need so if I'm gonna take a trade, I need it to be in here, and I also want to see a specific, like, I need to see the imbalance be filled before I take a trade. Maybe something like that. Low, fill in the imbalance, lower low as the catalyst, and then go higher. But just gotta be patient on it. Just gotta be patient on me. I mean, I have my alerts. I'm about to head to the gym. I think that's about it for the analysis this morning. If you were watching, thanks for watching. Call it a day, and peace out. Have a great day.